We are back with this video that we promised you. We are looking at nas100 this time, and we are going to be starting here to count our waves in a bullish trend. As we all know that we start by identifying the trend where we're heading. Is it a bearish or bullish bias? And then in this case, as you can see, we're going up, so the trend is bullish, and you decide where you start counting. So we're gonna be starting down here, right? So if the trend starts over here and then these are the waves, so where are we currently? Is it wave 3? Is it wave 4? Is it wave 5 that you're about to make? So let's find out. So we start by using the Fibonacci to we start by identifying those highs and lows that we can take as the important points that we're going to work with. So if we say this is a turning point, so if we call it 1, so where 2 can be, remember the acceptable percentages is 50%, 60%, and all these other ones below, but not 100% of this impulse. So in this case, this price set at 50%, right? So this is acceptable. So it can be 2. So 1, 2, right? So where 3 can be, at first this was like, okay, 3, 4, 5, right? And then this is how you would have identified that this is actually 3, because you will be measuring 4 around 30% or 20%, and then if this is the turning point, and then you'll be like, okay, I need this to be at 30%, which is somewhere at this price over here. 30% is here, and then you say, I want this price to continue being bullish. So as you can see, this price held very good. So but the market kept updating itself. So what you're gonna do, you're gonna update your waves, because usually in actual forms the waves be like, there are 7 waves in a full cycle. There are 7 waves. So you're gonna see that once you work with those waves, in most cases. So it's gonna be like 1, 2, 3, 4, 5, 6. So we are waiting with like the last wave, which is going to be the 7th wave. But remember that the tools we have only have the last number is 5, not 7. So we do not have the tool that has numbers from 0 up to 7, but we're going to be using this. So we're going to update our waves like this. So this is going to be changed as 3, then 3 is going to be here. If 3 is here, then 4 is going to be somewhere here, and then you're heading to 5. So what's going to be happening with these ones that you eliminated, I usually take this from 2, and then from where we correct it, and then I'm gonna clone it. So it's some kind of a harmonic pattern in between, when we're making the wavelength of 3. So though this is not equal exactly, but sometimes harmonic patterns are not that perfect. But the idea is that when we're making 3, we first be having a harmonic pattern in that length, in that distance, while we are about to reach 3, which if you can count it in as a wave, you're going to be having 7 waves in the market. That is how, when you first start putting your 3 over here, and then you have your 4, 5, but you'll be like, okay, we're not really that finished with the waves, because usually waves B7, I've seen this in most cases. So now you're gonna take your Fibonacci from 2 up to 3 again, and then you target 30% as your last support, and then you target 23%, because the graph may actually turn from 23% up to 5. That is also acceptable. So as you can see, 23% is doing very good, though we went below over here trying to catch the 30% over here, but we actually did not touch down here. But it's all acceptable as long as it's reached 30%, I mean 23, and even below 23%, it's all good. So that is an acceptable percentages. So we're going to be targeting 5 right now, and we're going to be taking our fib extension from where we started. It's 2 to 3 to 4. The lowest point where 4 has 10, and then 5 is going to be somewhere over there, 61.8. So you usually it's be 61.8. So that is how we're going to be looking for the market to turn, change in direction to become bearish from there. So if we can go higher from this point, it's going to be great. So let's go to 1 hour time frame and then see what is happening. Over here we can just have this, right? So if we break it, we confirm our trend. We can just have this. So if we break this, we're gonna need an APC in this direction, and then we continuously go higher and higher. Yeah, I think it's going to be this, but it is not confirmed until we break this line over here, and then we're going to be great, because over here, first of all, we did break the structure over here. This was our high. First of all, this was our high that we wanted to have, and then, okay, let me do this. Let me not extend it. So this was our high that we had over here. So if we wanted to break this high, and then we did over here, and then we go down, you're looking for those supports so you can buy again, because this is the signal that, okay, we may go up after we break the structure over here. And then, but you're gonna need a very, very, very like convincing structure. So you have broken this one right now, the surge and the surge is broken to the upside, and then some kind of a correction to the downside, and then you're going to be looking for those supports, and you're gonna find them. Maybe we would have taken these ones over here like this. This was going to be our lines, which we will regard them as support. So if we touch this level, we expect a reaction. If we break it, this was going to be our support, or this one, if we break this one, and then this one is going to be our last support before we go up. So this one is actually holding very great, and then we just have to break this line. And then we come back down, we go up. After we have broken this line, when we come back down, we update our support. It's going to be this one right over here. It's going to be this one. So as you can see, as we have broken it to the downside, and then we went up, though we never broken this one, but we went up over here, and then we used it as a support. So those who bought over here are actually in profits, and they might be in profits as the day goes, as the week goes, you know what I'm saying. So that is great. We're gonna see each other in the next video. If you are new, please hit